Are we facing a housing market shakeup in Texas?
Today's insights from industry legends like Cathie will open your eyes to emerging trends.
Best of all, we break it all down so you can get the essentials in just a few minutes.
Absolutely. Discover what's driving the surge in inventory and why it matters.
Welcome to Financial Insights in Minutes, your go-to source for rapid real estate news.
Stick around as we also explore the aftermath of Hurricane Milton.
You won't want to miss expert analysis on the ongoing challenges in the housing market. Anchors away. Let's dive into the aftermath of Hurricane Milton.
Here's the scoop. Hurricane Milton left Florida reeling with devastating tornadoes and massive flooding.
Just how intense was the storm? Let's navigate these troubled waters. What's the main takeaway from this disaster?
Hurricane Milton was a Category 3 storm, leading to power outages for 3 million Floridians and catastrophic damage.
Let's talk numbers. What's the casualty count in power reports?
Tragically, 2 fatalities have been confirmed, with an astounding 3 million people without power across Florida.
So what's happening with FEMA's response?
An alarming twist. Many are denied aid simply because they have homeowners insurance, while FEMA claims they are running out of funds.
What's the buzz on community support?
Despite government failures, volunteer groups are stepping up. Community involvement is more crucial than ever.
Let's dig into the juicy part, the theories of weather manipulation.
From hurricanes to urban planning, bizarre theories are swirling about weather manipulation in Tampa's development plans.
What can we expect moving forward?
Experts project recovery could take years, with insurance companies inundated by claims.
And how about those solar flares? Are they a real threat?
Indeed, a G4 solar flare is on its way, which could disrupt critical infrastructure.
To wrap it all up, what's the most important takeaway?
Community resilience is key. As government agencies struggle, citizens must unite to support one another during these challenging times.
But don't go anywhere just yet. Our next insightful summary dives into the alarming spike in homes available in the market.
You won't want to miss Nick Gerli's insights on why Realtor.com reports a 40% inventory spike across the South.
Anchors away as we dive into the housing market. Did you catch that report about homes piling up across the South?
Here's the scoop. Nick Gerli reveals that the inventory of homes for sale has surged, leading to price stagnation and even declines in many areas.
That's a tidal wave of listings. What specific trends is Nick seeing in the inventory numbers? What's the main takeaway from Nick's analysis? How is this inventory surge shaping the market?
Nick argues that the recent spike in housing inventory, reaching levels not seen in 5 years, is pushing prices downward, making homes more affordable for buyers.
Let's break this down. Inventory data shows a whopping 941,618 homes for sale, the highest in almost 5 years.
Exactly. In states like Florida, the inventory has skyrocketed by 59% compared to last year. It's a real game changer.
What about the impact on home prices? Any notable adjustments happening?
Homes are seeing significant price cuts. For instance, a luxury mansion in Texas had a price drop from $899,000 down to $775,000.
And how's buyer demand holding up amid all this inventory?
Interestingly, despite lower mortgage rates, the mortgage application index is still down 43% compared to pre-pandemic levels, which is concerning.
So, what's in store for the housing market? Any predictions from Nick?
Nick foresees further price declines, especially in Florida and Texas, as inventory growth continues to outpace demand.
Any geographic surprises in housing trends?
Absolutely. There's a tale of 2 housing markets. While the South sees growing inventory, the Northeast remains constrained.
Let's wrap this up. What are the main conclusions?
The housing market is shifting as rising inventory leads to declining prices, especially in the South. Buyers may find more opportunities as sellers adjust to new realities.
And don't sail away just yet. Up next, insights from Ken McElroy on how I run my $2 billion business in just 90 minutes per week.
You won't want to miss Ken's strategies for success. Stay tuned for more.
Anchors away. Our next insightful summary dives into how Ken McElroy runs a $2 billion business in just 90 minutes a week.
Let's get straight to the facts. Ken reveals his secret to success through strategic delegation and clear vision.
It's like navigating through a stormy sea. What exactly does he mean by running a business this lean? So what's the core thesis of Ken's approach?
Ken emphasizes that effective business management combines having a clear goal and understanding the right time to expand your team. It's about doing more with less.
Let's break down those key points, starting with how Ken began.
Everything started with one employee. Ken recognized that Sandy, his first hire, was spending too much time on accounting, which led him to strategically expand the team.
And about those goals, what's Ken's secret sauce?
Ken exemplifies this through his growing unit count, from 1,000 to 10,000. He simply breaks these aspirations into smaller, actionable targets.
What about the dynamics of his team?
Great teams adapt as the company grows. Ken points out that specific roles like a CFO or marketing lead become essential as the business expands.
Now we're talking numbers. How does Ken measure success?
Ken relies on KPIs. By concentrating on a handful of vital metrics, he ensures that decisions are driven by meaningful data.
What's the secret sauce for maintaining focus?
Ken's 90-minute meetings serve as a vessel for vision and accountability. Everyone discusses their goals and where they stand. It's all about alignment.
So what's on the horizon for Ken's business?
He's set an ambitious target to grow from 10,000 to 25,000 units in the next decade. This means scaling up his team substantially.
To wrap it up, what are the nugget insights here?
Ken's journey shows how vital it is to effectively delegate and maintain clarity and vision to achieve monumental growth without overwhelming oneself.
But wait, up next, we delve into insights from Melody Wright on Helene and Milton will change the housing game, an update from East TN.
Trust me, you won't want to miss this exciting perspective.
Anchors away as we navigate our next summary. How has Hurricane Helene reshaped the housing landscape?
Let's get straight to the facts. Melody Wright dives deep into the tremendous impact of Hurricane Helene on East Tennessee's housing market.
Hold on to your hats, because it's about to get turbulent. So, what's the essence of Melody's insights?
The core thesis reveals that Hurricane Helene has dramatically reshaped the real estate markets, increasing inventory challenges while decreasing the income potential for many landlords in a once thriving tourist area.
Let's break down the key points, starting with the storm's damage.
Hurricane Helene led to severe destruction, impacting entire communities, with many losing their homes and livelihoods overnight.
What's happening with short-term rentals?
With over 2,900 short-term rentals in Asheville, operators are now faced with potential total loss of income due to storm damage.
And what about real estate inventory?
Despite expectations for seasonal inventory declines, inventory actually rose by over 3%, highlighting economic struggles and market shifts.
What's Melody predicting for mortgage companies?
She foresees non-bank mortgage companies plunging into liquidity crises as defaults rise due to economic instability post-Hurricane Helene.
Finally, how will this impact future investors?
With the significant short-term losses, investors might start to rethink the feasibility of investing in high-risk, disaster-prone areas.
Let's look ahead. What does Melody predict for the market?
She expects coming shifts towards a buyer's market and decreased rental profitability due to sustained economic distress.
And what about insurance costs?
Melody predicts rising insurance costs, which could cause significant challenges for homeowners, potentially leading to bankruptcies among some insurers.
To wrap up, what's the key takeaway?
Melody's insights reflect a crucial tipping point for the housing market, emphasizing community resilience in the face of disaster.
But get ready for what's coming up next.
Our next summary will uncover the impacts of foreclosures on taxpayers, featuring insights from John Hoffman on the Saks Realty channel.
Let's dive right in. What are the hidden costs of a foreclosure on taxpayers?
Here's the scoop. John Hoffman explores a shocking case in Aurora, Illinois, revealing the taxpayers' losses on poorly managed foreclosures.
What's the main takeaway here?
The reality is that foreclosures are costing taxpayers dearly, with properties like the one in Aurora lagging in repairs for years.
Let's break down the staggering repair costs.
Exactly. Over $261,000 was spent to repair a property that sat for nearly 6 years, which is an incredible waste of taxpayer dollars.
And what about those unbearable wait times for these properties?
Right. Properties can sit empty for years, contributing to housing shortages and loss of tax revenue.
What do these foreclosures mean for the community at large?
These prolonged foreclosures could lead to significant economic degradation and loss of community investment.
What do experts predict for the future?
Increased foreclosure rates are likely as interest rates climb, potentially leading to another crisis.
And what about the government's role in all this?
Government response is crucial. They must create better systems for handling foreclosures and managing taxpayer dollars.
So what's the big picture takeaway here?
Taxpayer funds are being wasted on poorly managed foreclosures, highlighting the need for systemic change in how these properties are handled.
In closing, is the housing market in crisis?
Absolutely. With rising interest rates and prolonged foreclosures, who knows where we will land?
If you found this summary helpful, please like and subscribe.
Your support helps us continue bringing valuable real estate insights.
As we wrap up, we've explored some critical insights from leading experts on the Texas housing market.
Indeed, Cathie Wood and Jerome Powell both highlighted how rising interest rates are reshaping market dynamics.
And on the flip side, Nick Gerli's observations about inventory surges suggest buyers are adapting to new norms.
However, while McElroy and Nelson express optimism about real estate investments, John Hoffman raises valid concerns over rising foreclosures.
It's a complex picture, but understanding these nuances can empower your investment decisions.
Absolutely. If you found this analysis valuable, hit that like button and subscribe to our channel.
You won't want to miss upcoming insights on the shifts within the housing market and more.
Thanks for joining us today. Be sure to check out our other videos for more actionable insights.